Hello, my name is Quentin McCall, and welcome to Knowledge for Finances. Today, we're going to be discussing the 5 things that will get you denied for a mortgage. Now, typically, when it comes to looking at a mortgage, we want to look at some of the things that most people do not discuss and talk about. All right. So, number 1, a temp job. Sometimes when somebody is in between jobs, and let's say that you were in a situation where you were trying to move yourself forward in your job, and maybe you got laid off, maybe hours were cut, and you decided just to quit, you needed the full-time hours, or something just happened in your life. In between the time you apply for a mortgage and in between the time that you begin with it ready to close. So having a temporary job will negatively impact you getting approved for a mortgage. Because when it comes to buying a mortgage, the underwriters at mortgage lenders will want to see that you have full 40-hour employment and that you have a stable job within the same field over a certain period of time. Now, if you've been working for a company, say, 10 years, and let's say you took another job, so you got an increase in income. I mean, as long as you're in that same type of field, like you went from being a manager, and then you took another job as a manager at a different company, and let's say you've been on that job, say 6-7 months, that'll be fine, because you did not change careers. You basically just moved to another company, took another position for a pay raise. But in the situations where you particularly end up taking a temporary job, that will impact an approval. So make sure when you apply for a mortgage that if you work 35 hours, make sure you put down 35 hours. If you work 37 and a half hours, make sure you put down 37 and a half hours. If you work 40 hours, make sure you put 40 hours. Whatever you put down is what the underwriter is going to use for your income and your employment. Everything needs to match up. Anytime you go through the process and something doesn't match up, you run the risk of something being kicked back. Unverified income. And 2, we'll kind of do this a double. You did not pass the verification of employment, which in the mortgage world they call a VOE. Unverified income would be something related to using Cash App, using Vimeo. What are the other ones? I can't remember the other ones. But anything that you can't really verify your income, Google Pay, PayPal, anything that's you're taking money from in a cash situation and you're not filing income tax, that will cause a problem in verifying your income. So any income that you're going to claim, you need to be able to verify it. Let's say you have a side hustle, and let's say you made $20,000 extra in a year from your side hustle. Let's say you make $50K on your job. So total, you actually made $70K. But if you file your income taxes and you only file your W-2 $50K salary, and you didn't file the $20K, and then you come up and you're trying to buy a house, and then all of a sudden you want to bring in, I did make $20,000 a month, doing my side hustle. Well, you need to file that information on your tax return. What I recommend that you do is, if you do have a side hustle, you need to create an LLC for that side hustle. And once you create that LLC, you need to have a bookkeeper do this, an accounting firm, or you can do it yourself, whatever you're comfortable with. And you need to do your profit and loss statements every month. And then once you get to the end of 12 months, you'll be able to easily transfer that information in QuickBooks over to your tax returns. But this is why it's good to just use an accountant. An accountant that has a bookkeeper on his staff probably charge you anywhere between $30 to $50 a month to do the bookkeeping. Just depends on what other services they have or how much they charge. But usually $30 to $50 range is normal for monthly bookkeeping. And you just hand that off to somebody else and let them do your bookkeeping, and you don't have to worry about it. You'll just link everything through QuickBooks. All your business accounts information will be pulled into QuickBooks, and it'll be simple to transfer the information over to your tax returns. And then, of course, you would pay tax on that, but you'll be able to use that income to purchase a home. If you do not do this with your side hustle, you don't create a business account, you don't create an LLC, you're going to cause problems with yourself. Now, let's say you don't create an LLC and you do it under a sole proprietorship. That's fine. Only thing with a sole prop, you just end up paying, self-employment tax of 15.3%. But it's not like something that is a deal killer if you don't file an LLC. The most important thing is that you keep good records, and when you keep in the good records, you actually file on your tax returns. So that's what we mean about unverified income. And it relates to the verification of your employment. You want to be in a situation that when they do call and verify your employment, that employment is able to be verified. Most mortgage lenders currently, as it sits today, in our current pandemic of 2020, today is September 13th, recording of this video, they're calling even after they send you a clear to close 24 to 48 hours before they schedule the final closing. Sometimes they'll call it, they're doing a follow-up and make sure you still have your job. So keep that in mind as well. Defaulted student loans. If you're in this situation, don't even try to buy a home. You won't be able to buy a home, FHA, VA, USDA anyway, if you are defaulted. But conventional, you won't be able to purchase either because of the balance amount will be over the automatic underwriting amount. Usually the automatic underwriting system, anything above 2,000 usually will cause an issue. So what you want to do if you do have defaulted student loans, it's very easy to deal with this. You just want to get in a loan rehabilitation program. You want to make the non-payments in the loan rehabilitation program. Once the non-payments are made, they're going to close out that loan, zero out the balance, take the loans out to default, and they're going to open up new loans on your credit report. Once that's done, then you'll be eligible to buy a home after you've made your first payment on the loan after it's out of default. That just means that once you create your rehabilitation and a new loan starts, that you make that first payment. After you make that first payment, you're fine. Also, make sure that you get that information zeroed out. A lot of times the student loan services will take you through the program. You'll go through the defaulted student loans and you'll pay it off, and then they won't update the information as they should. So make sure you have that done and have it deleted from your credit report. But if you have any questions about that, just reach out to me, contact my company, and we can lead you in the right direction for that. Number 4, late payments. Now I'm going to link to a video in the description to link to a video that we've already discussed as it relates to late payments and buying a mortgage. If you go look at that video, we'll go into more detail, but on the simple terms discussing it here, late payments can kill your ability to buy a home. Go back to the link in the description and you will be able to learn more about late payments. High debt to income ratio. Now this is a big one. Now the easiest way to solve this one is pay off your debts. Now in a perfect world, in a best case scenario, what you would want to do is you would want to go into a situation buying a house with no car payment. You have no credit card debt, and let's say only payment you had was a student loan. That is the perfect example outside of having no debt to buy a home. All right, and now if you can't do that, you may run the risk of a high debt to income ratio depending on how many payments you have. Having car payments drastically impact how much home you can purchase. Typically, certain underwriting standards, if the car has less than 10 payments remaining, they can remove that out the debt to income ratio. Some underwriting standards have rules such as if the car is co-signed by someone else that has a joint on it and that account has been paid for, I want to say, don't quote me on this, I want to say at least 12 months, but it may be 24 months, and they can take that out of debt to income ratio. But that might not even be possible right now with the COVID-19 and the different overlays that they have on mortgages. So just check with your mortgage brokers on things of that nature. So either you got to increase your income or you have to reduce your debt. I recommend never buying a home with credit card debt. Before you buy a home, you should pay off all your debts. If you can't pay off all your credit card debt, you should at least pay off all of it, but say, 10% of it. So let's say you owed 10 grand in credit card debt. You need to pay that debt down to at least $1,500 before buying a house. Do not buy a house with high credit card debt. That is not a good idea. Also, like I said earlier, if you can pay off your car before you buy a home, that would be even better. When you go into a mortgage application process and you have no car payment, you have no credit card debt, and let's say all you had was a student loan payment of $200-300, you're cooking with gas. You're gonna fly right through underwriting with no problems. But when you do add all these extra things onto your application, you make purchasing the home a lot more stringent and difficult. All right. If you like the video, please click on the like button. Please subscribe to the channel. Make sure you hit that bell. And please keep in contact with us with other additional information that we'll be releasing on credit tips, and how to really accelerate your credit score to have the super credit that you need to buy the homes and the cars that you may desire, but doing it in a very educational and consumer friendly way. Please reach out to us if you have any questions. All the contact information will be at the bottom. Thank you, and you have a great and wonderful day.